So about a week ago, Expedia was in the news for getting a Google penalty, and in this video I wanted to discuss why this penalty is more serious than investors realize. We're going to go over the specific of Expedia's penalty, what a penalty is exactly, why Expedia received this, and what this means for the stock. And when the news first broke, Expedia dropped 4% in the day, but it's gained most of that back. Like, this penalty seems to not even register on investors' radars, and I think that's just because they have no idea exactly what it is. And what I can tell you is that searchmetrics.com, which first reported this, said that Expedia lost approximately 25% of its search traffic starting around January 19th. And what this means is that Google basically took manual action, or algorithmic, we're not sure, probably manual though, on Expedia for manipulating the results. And basically, a lot of people don't really realize how Google ranks websites. They sort of take that thing for granted. They think that, it just happens and they're happy with the results, so they don't really think too much about it. Whereas in reality, Google has to actually calculate this via a formula known as an algorithm, how each website should rank for every term you do, especially since a lot of terms have never been searched before. When you come up with a strange phrase or something like that, Google has to calculate on the spot which website should show for that position. So naturally, website owners try to manipulate Google's search results to display their website for specific terms. In Expedia's case, they wanted to rank for things like hotels, or cheap hotels, or discount hotels, or anything like that. Travel deals, whatever. So the way it actually works is that for the most, this is a very simplistic view, but one of the strongest ways to make your website appear for a specific term is to get links from other websites. So let's say my website linked to searchmetrics.com in the blog post that accompanies this video. Google sees that and thinks, oh, How to Invest HQ has linked to Searchmetrics. That must mean Searchmetrics is a swell site, because How to Invest HQ is, a small to moderate sized blog, and they're pretty reputable. They don't link out too much. So Searchmetrics.com must be a legitimate place if this site's going to rank to it or link to it. So if a site goes out of its way to accrue millions of these links in this manner, Google will rank the site very highly, and that's basically what Expedia was doing. And they were caught engineering links to their own website, and Expedia actually tried to cry foul. They said that they were the victims of a negative SEO campaign, or search engine optimization campaign, and they claimed that competitors were building links to their website in order for Google to find them and penalize them. I mean, maybe they did a couple links or a portion of their link portfolio, but there's been a lot of blog posts and Twitter discussion on Expedia's tactics, and there's just no way that it wasn't at least largely internal. Like, as an example, there was a travel article on Huffington Post, and randomly in the article it was like 10 tips for cheap travel or something like that. In the middle of the article, it linked to Expedia.com with what's called the anchor text, the text that linked to Expedia. It said cheap flights to New York or something like that, like a very odd phrase to be linking to the Expedia page for New York. It was clear that either Expedia.com was paying Huffington Post, or alternatively, the author that had access to Huffington Post was getting paid on the side by, Expedia to build that link. There's no way that was, a false link, because the link from Huffington Post to Google is seen as very high quality, because Huffington Post is not a link that just any website can get a link from. It's, very few websites in the grand scheme of things actually can acquire a link from Huffington Post. So there's no way that was fake. That was definitely engineered intentionally with that anchor text to try to rank Expedia. So they got caught, they got busted, and they got penalized as a result. And this is a really significant penalty. If you go to alexa.com/site info, there's a picture of this chart in my blog post that's in the description. Expedia's dropped from a global ranking of approximately the 430th most popular website in the world on a given day in mid-January. They've dropped all the way down to 575, a position jump or drop of 145 spots. I mean, that's a huge loss in traffic. And sometimes losses in traffic this way are seasonal, but I looked at Priceline.com, which only dropped from 710 to 740 during the same time span. It's only a 30-spot drop, not very significant. Expedia's drop was huge, especially when you consider that the lower your rank, the less traffic is involved between the spots. So 430 to 475 is comparable to dropping from like 700 to 900 or even 700 to 1,000. It's a huge drop in traffic. And some firms are actually estimating this could represent up to 20% of the total site traffic for Expedia.com. And I don't need to say that's a massive loss, 20% less people. I mean, that's not going to be quite 20% less revenue because Expedia gets revenue from other sources than just visitors. And paid search is likely to convert a little bit better than organic search since it's, they're bidding on terms that are likely to convert. But the bottom line is they've lost a lot of traffic, and that's it's enough traffic drop to show up on the balance sheet. And it's possible that Expedia will get this penalty lifted eventually, and I'm sure they will, but they haven't been able to get it lifted yet. And when it is lifted, if they discount a certain number of links to their website, they probably won't rank as well as before. And JCPenney went through this whole sort of deal a couple years ago, and it took them about 3 months to get the penalty lifted. So there could be up to 3 months for Expedia where they're not going to rank well. And that's going to show up on next quarter's report for sure. And the reason it's going to show up so strongly is because website margins are decimated by sudden traffic drops. Because a website mostly has fixed costs. They allot a certain amount of money for advertising, and they allot a certain amount of money for staff, and a certain amount of money for development. But after that, there's almost no additional cost for more traffic to the website. It doesn't require any more resources for 1,000 people to fill out Expedia's, form and book a deal as it does for 2,000 people to book the same deal. I mean, it's all automated. So when, you go from X amount of fixed costs based on Y sales, and suddenly those sales drop out from underneath your feet, you can quickly fall into the red and very deep into the red if you have a sudden drop in traffic, even if it's only 20%. So as a result, I mean, I would sell Expedia immediately if I owned this stock, and I wouldn't buy again until the penalty was lifted. And one caveat is that Expedia might still have a good quarter because they're about to report in a week or so. And it's likely since, the last quarter ended in September. So, I mean, we're going to have November and December on the books already and most of January. So it's not likely this is actually going to show up on the balance, on the quarterly report. Instead, it's going to be, it's not going to show up until the next quarter. So keep that in mind. And if the penalty gets lifted within the next week or two, it's only going to be, a small impact. But if it lasts for a month or two before getting lifted, or even longer, it's going to significantly affect the stock in a way that investors are not planning on. So keep that in mind. Hope this video was helpful. Subscribe to my channel. I'll try to get a new post up and a new video up if I find that the penalty is lifted. So that it's safe to be involved with this stock. But at a minimum, I wouldn't want to own it until the next quarter, until all this mess clears up.